Hey guys, we are on holiday week. Chag Sameach to all my Jewish friends out there celebrating Hanukkah. It is Monday, December the 19th, and we've got holidays coming up. We've got lower liquidity. Today, we're going to talk about Roblox because I think that even though this is not my style of investing and I will not have a position in this for some time, this really deserves to be researched by anyone fundamental. And quite frankly, I think that this one is going to be very relevant to how the regulators are going to think about crypto in general. And I know they don't do crypto, but I'm going to show you very clearly what they do and how it's relevant to that. So definitely stay tuned. If you're a bear on this one, then I want to tell you, I'm going to show you why you got to be really careful if you're doing fundamental analysis on this one, because this is not going to be valued in quite the same methodology. But I swear I will make good on that claim that is not just some rando saying it. All right, let's get into the day. Past performance is not indicative of future returns. You guys know I always set up all of these films, all of these little shows that we do on YouTube with what's going on in the day so you can get some context around the climate of my comments. Here, this market wants to sell itself into the holidays. So usually we get a Santa Claus rally. Here, we're going to get the markets in the red. We've got crude oil starting to lift up as we get that colder temperature in the Northeast. And, you know, it's going to be a really interesting run next month in energy. To be fair, I'm not 100% sure which way to take it, but to the extent that your names have good dividend yields within oil and gas, you probably be okay for at least the next few quarters at a minimum, and then we can stop and see what the governments are doing as relates to playing around with this energy complex. Other than that, this isn't I mean, there's a lot of economic data that comes out this week, but it's not necessarily the stuff that jogs the markets. We do have consumer confidence coming out on Wednesday. I mean, there's no way this consumer confident comes out super confident. Let's just call it what it is. And then we've got PCE on Friday, the day before all the holiday stuff closes abruptly. So then you got a 3-day weekend, and you know, inflation's going to come out how it's going to come out. But then with all this crypto going on, I think that this 3-day weekend is going to be a scary one. If you're confused about that, please do have a look at the last video that we posted on Adobe and our response to Binance CEO that was just posted this morning. Definitely have a look at why we are worried about the weekend of the holiday weekend for the cryptocurrencies. Now, let's talk Roblox, okay? Let me take it off here for a second. A lot of people know Roblox because it is the one that all the kids love. And that's part of the reason why I originally started looking at it in a lot of ways. But valuation has been really crazy on it ever since it went public. And quite frankly, it is in the meme stock area. That said, as I've been reading some of the extreme negativity on it and listening to the call, I realized that part of the challenge with this one has to do with a video that I created earlier, which I'll make sure everybody has a link to, in that you can't do the same type of classical fundamental valuation work on a stock like this that you would on like a Pepsi or Coke. It's actually slightly different the way you need to think about it. And I'll show you why you can't think about it with the classic valuation first. But let's go through the story. Here's what's happened. This thing went public on March 11th, 2021, and then has had a run into everything with the meme stock land, and it has come cratering down from the 130 level or so. It's now around 25 bucks. I think it's lost more than this on the day. And boy, it has lost so much market value. It's not even funny. The reason it lost all that market value is because it did not have a good quarter. Okay. If we just purely go by what did the numbers look like, we saw 2% revenue growth, which is not enough to give you that love in kind of this valuation that is absolutely very aggressively growth oriented. Okay. It's very growth oriented, but we are in a period where there are some things. And you can see that their costs also went up a lot. Okay. 817 versus 586. So because they're still in growth mode, they've got to spend like crazy. And in particular, they're spending on R&D, which you'd expect them to, given what it is precisely they do. And so you end up with operating loss 3.8 times more than the previous year. So they're spending 3 times, they're losing and burning through 3 times more. Okay. So then If for some reason you thought this was temporary, you'd still have to get a sense for how much they're burning through cash. It turns out that this is a little bit of a positive in the sense that you've got stock-based compensation was a double. So that's a big part of what is actually taking out the cash from here. Okay. And that's about 80 million more ish, let's call it. And then you've got deferred revenue, which essentially is people buying Robux. They're prepaying on the system for activity that you would assume they would do later. So that comes in as deferred revenue. It's a very, very strange way of accounting for it. Nonetheless, they went through all of the rigmarole associated with that in months prior, and this is what the accountants decided was the right way to do it. So there's no issue. But this is the Robux, which I've spelled incorrectly here. I think it's just RUBUX like that. That's what deferred revenue is that they've got a bunch of Robux sitting there, which essentially is people buying with the understanding that they're going to be using it on the system going forward. And that is up 42%. However, part of the problem is that some folks didn't feel like that was enough relative to previous quarters or the previous month report, et cetera. And so that's why this thing had another round of short selling or selling. Some of it's not even short. Some people are just done with this for right now. The other day on the balance sheet, they do actually have enough cash. So they can actually burn through cash for a little bit. And so they've barely drawn it down. If you look at current assets, it still looks pretty good. They still got more or less the same amount of cash, and their total current liabilities, they've got more than enough coverage for it. So it's not the end of the world. 16.5 billion in market cap. Add back in the cash, you've got really a market value or enterprise value of 15.5 billion off a company that is making, call that times 4, $2 billion. This is expensive on a classic valuation way of thinking about it. It has no earnings on top of that. So normal, and then in EBITDA, we're really only making 50 million in EBITDA, even after we add back in all the depreciation, all the weirdness, all the other stuff that's going on here. So on a classic valuation perspective, this is always going to look crazy. And because the metrics have slowed, it's even worse. It's even worse. You've got average spend down 11%. You've got bookings up 10%, but that is a slowdown if you compare it to how things have been going. You've got daily active users, about 58 million, but they had slightly more than that in October. And hours engaged, fair and square, that's up. So that's the way that a lot of folks are spinning it. But I got to tell you something, that would be a little bit myopic as a way to look at it, because if you look at my video that I posted just the other day, there is more than one way to fundamentally value a company. And this one would very clearly be valued more in the sense of like, what is the company worth intrinsic on if you had an activist, if you had some kind of breakout, if there was some kind of merger and acquisition that was going to happen to this. And what I'm going to say is, if you're doing fundamental work, you better do that, because if you don't do that valuation metric, you will never understand if there's ever a time to buy this company. And even though I'm not convinced that the time is right this minute, I am convinced enough that there is enough value in this company that I should at least be a little bit more, I should start going to school on it and really know it, so that if the price drops to a place where I'm interested, I'll be ready to get it. Now, here are some things that are just relevant that you got to understand. Roblox has actually created an interesting enough business to where it would be smarter to buy Roblox than Roblox. Okay, hold on. Let me take it off real quick. Let me say it one more time. Sorry, guys. Roblox has created a business that is interesting enough to where it would actually make more sense to buy Roblox than to build it yourself. And I'm going to try to make that argument. Some people may feel differently. Nonetheless, there's enough companies out there that really do need what they've done thus far, that this will always form the bottom on the valuation for this stock. So the classic fundamental approach at this point is going to be irrelevant. A more old school format of what are these assets and what could I make them valued at in the future is the number one first thing that you got to think about. In that regard, they got 188 patents for what it is they're doing. Somebody would need to check each and every one of them. I did a very quick check, but I've not had time to go in and value each one. They got 1,600 head count. Okay, why is that relevant? This 1,600 headcount is very similar to the Activision headcount in the sense that these people are all extremely talented at the next generation of graphic design, gaming design, the type of speed and latency issues that you're going to have if you have people in different countries. They're even doing translation work. These are 1,600 extremely relevant headcount. And if you compare that to what Activision was purchased for, then you start to get a sense for what would be the valuation that I find very interesting. The second thing that we're going to have to talk about is the gaming platform itself. Okay. It is it's a little bit different from all other gaming platforms. Maybe you guys might want to compare it to Minecraft. But what it is that this platform allows for other people to sit there and build games on top of it, and you automatically take a cut. If anything, it doesn't quite look like a Minecraft, but it definitely will look like a little bit what Apple Store is doing. And so in that regard, it is an incredibly interesting long-term purchase if somebody was trying to do it. Now, remember, we've got Microsoft that is buying gaming every now and then, but quite frankly, given that it's in metaverse type technology, there's any number of players that would find this fascinating as an addition to their whole barrage at a price. So let's look. You only got 58 million users, which is relatively low. But this is where they lay out geographically. And then this is where Minecraft is everyone's favorite game. And remember, in 2014, Microsoft bought Minecraft for $2.5 billion. Right now, the market cap is 16 billion. So that's at least, I mean, that's a huge drop but that's not what I'm saying is going to happen here. $2.5 billion in 2014. And they made all of that back in 2 years, about 2.5, call it 3 years, depending on how you want to think about profitability. But because Microsoft had such massive amount of distribution, marketing, et cetera, they made it back really quick. So anyone looking at Roblox is probably going to give it some number greater than 2.5. And if you're going to try to pretend like this is a great short all the way down to something nonsensical, you're going to also have to do this valuation work. The next thing I want to talk about is that Roblox is a very interesting crypto precursor. Okay. So even if you're like, man, I hate all this valuation stuff, but why you want me to research this? It has to do with the Robux item in the middle, which is a token that exists only within the game. It is a true utility token that in theory is not even remotely interested in trying to touch the word crypto, but that is nonetheless what it actually is. And why do we say that? Robux works within the Roblox websites. People absolutely, if you started to sell your Robux offline to someone that might want it online, someone will 100% pay you if you try to sell it at a discount. That is very different from all the other crypto on this universe in certain ways. But because Roblox isn't even interested in trying to do this piece of crypto business, you don't have that. But those coins are absolutely worth something because those users are absolutely willing to pay for it. Additionally, if you're just studying crypto in general in school or something like that, this is the way you study it because Roblox has legitimately created an economy on it. Now, why do I say they've created an economy on it? This is what happens. You got players, they spend on they spend money in the game, Robux, which means they exchange US dollars and then they'd rather have Robux in the game. And then creators actually do earn Robux and they do actually have the ability for it to spit out something on the other side that is actual money. But because creators are living in this thing a lot, here's the average experience on the platform. So we've got 346 people spending more than 10 million hours on it and so on and so forth all the way up. But you've got a huge component, only 9.5. So you've got, call it 46 million people that are spending more than 1,000 hours on this. Okay. So there is a real demand for the coin itself. Hence, valuing this as if it's going to go to zero would be foolish in my mind. Okay. Now, I also want to talk about the user base. This user base is very young. This user base has not yet started to make an income in and of themselves. So this user base is very interesting to a lot of different companies that might wish to have the Web3 presence as well as the brains that is in it. And then finally, let's see, last thing we're going to talk about here and then move out of this. Yeah, so the token itself, the user base demographic is worth something. The game platform as is should be thought of as a young early stage gaming company that you want to bring in. If you took out that R&D, you'd see immediately what was up. If you merge those people with your existing R&D, there are probably synergies for any number of gaming companies, if not synergies for non-gaming companies. So with that, those are the major reasons why you cannot value this on a classic valuation standpoint. You must value it on what is it worth, what the management team has built. And I do think that that valuation is not straightforward to do. I've got some initial thoughts on where, but I'm not going to be foolish and speak it to you. I personally am probably not going to buy it right here today when everything is red on my screen, but I am going to watch it very closely and try to start to find back of the envelope ways to value those 3 pieces or those 4 pieces. And with that, I'll take questions.
I mean, okay, excellent. Wow, Roblox.
Yeah.
Full disclosure, we own it at 70, but we're hedged.
I definitely buy it at 70. I think you're right. And I think hedging is the smart thing to do. I don't think
No, $70 a share. It's 25 now.
What's that? Oh, you own it 70. Sorry. So you hedged. Yeah. So, I mean, at 7, sorry, I thought for some reason I was thinking in my head 200 something of the high and then how much it's come down. Okay. So I think with Roblox, it's a weird one because I mean, okay. So obviously 2.5, right? Because that's what they bought Minecraft at in 2014. Okay. But if they made back that money in 2 years, then that would indicate that you would probably pay double that easily, just because that's an abnormally fast period. So that gets you to 5 billion. You know what I mean? But then that's assuming
they're really they were the original metaverse. I mean,
really are. Yeah, they really are. And also, the thing is one thing that Minecraft is still like at the time that Minecraft was purchased, there was no Gucci going in there trying to sell to the consumers that were on that platform, and that is a costless transaction almost for Gucci. It's really just programming costs and then how much they want to do on the platform. And then they get it actually, I think for a lot of them goes in under marketing expense. It doesn't even go in as like cost of goods sold. So, I mean, where this thing could go in the future, as far as revenue streams go, is much bigger than just what it is right now.
Yeah, if kids love them, I mean, those kids don't stop playing games. There's plenty of 50 somethings playing games.
Yeah.
Yeah, kids love Roblox. Cool.
Yeah. Yeah, I just wanted to make this because I do really think that the portion of Roblox that becomes incredibly interesting is the part where it's really the we're gonna need to and so part of the reason why I started really looking at it was because we're gonna need to understand how to regulate and how to even think about what is actually a cryptocurrency and what is not. Since Roblox has zero interest in making money off of crypto or all this crazy, they really just need a fungible token within the ecosphere, their actual within the Roblox economy, not the weird ecosphere, whatever you want to call it. Since they need essentially a crypto token in there, I think that they probably will give really good guidance as a case study to anyone trying to understand how would you ever assign value to a token. Right now you've got 1001 talking heads pretending like tokens have no value. There's no economy on top of it. There's no ever use case for ever want to use it. And in fact, there are many tokens that have lots of use cases, such as the one that's slowly but surely replacing Swift. But here, this would almost be crypto light, because the way that they do the token is really the security within Roblox, protecting Robux. And then it's very much so a light version of crypto, because it doesn't require that you mint and have gas fees and all that good stuff. So I think that there's something in that portion of the technology that in and of itself is very interesting. It's just going to take time for everybody to appreciate it.
So you're saying they sell these Robux away from Roblox?
Right now, what happens is you can get a gift card. If let's say your kid, you wanted to give them a bunch of Robux.
Right.
You do it through the existing infrastructure that already exists. So you buy them an Amazon gift card or whatever gift card, they would enter it into the system, and then your kid would have a bunch of tokens.
Yeah, that's perfect. Okay, and retail, I mean, I remember looking at this. I mean, retail, I mean, they've got a great revenue stream from retail, right? Potential, like.
Yeah, they do.
Right. Okay.
And even individual, but I think the thing that's the most interesting about it in the context of crypto is there are people that are making $500,000 plus per year building different games or different items, if you will, avatar related items in the
Right.
game itself. And that's something that a lot of other beginner, like, there aren't that many other than the ones that are truly used by the banks for a very particular use case. And it's really more blockchain technology than an actual token. I mean, some of them are tokens. Other than that, there aren't that many use cases. This is a use case within the consumer world. It's just that Robux, to avoid all the scandalousness, has not ever tried to become truly its own crypto. I mean, I might stand corrected on that because there may be some ventures that they've attempted to do. But mostly and largely speaking, in any of the calls that I listened to, they weren't trying to talk like that was an interest. They're really more interested in building out the gaming infrastructure and continuing to execute.
Yeah. Well,
But there's almost no way to look at this and not see a token sitting right in the middle of it.
yeah, it's impossible to pick a bottom. So, I mean,
It is.
this Tesla, I mean, just start building a position. I mean, and hang on.
Yeah, I mean, I'm willing, because the market is so red today and because this market's red, I would still try to go, I would try to, I mean, I wouldn't do it this week. Like I said, it's definitely greater than 2.5. It's probably greater than 5 billion because given what Microsoft did with Minecraft, easily you could see someone even paying 5 billion, 6 billion and being able to get their money back fairly quickly, right? If they also had, if they first of all had a way to market to that demographic, or if they already had marketing expertise and they also knew exactly how to operate further and could help even lower the cost on the infrastructure portion. So you could see someone like, I'm just going to throw out names, Google, Facebook, all of them have that 100%. You know what I mean? And it would slot in with something like that, Sony, but probably I don't know. And the thing is, at 16 billion, that's much smaller than the Activision deal was done at. So it probably won't hit the regulators quite the same way. At 8 billion, it definitely won't hit the regulators. And as we go farther down, that thing won't touch the regulators. It'll just be too small to look like you just bought some tiny game. So this is definitely not a zero relative to what the street and others might pretend like it is. It is not a zero. It is definitely, but could it drop down if the market just decides to value everything tech a lot lower? Could it drop down? Yeah, it could. And it's important to have your work done before that happens, because you're not going to be allowed to, you're not going to get a huge amount of time to buy it if that does happen.
What's the market cap?
Right now, the market cap is 16 billion.
Okay.
Yeah. My suspicion is that as it, like actually today we have to see, because today the market's so red. But we know this market knows how to autocorrect pretty aggressively. And my suspicion is the first quarter is probably going to be weaker than last year. Because remember, we're just doing year over year. It's probably going to look like they made money because I think they will have corrected some of it. But it's going to overall still look weaker than last year.